Safari. We'll go over here. I need to, we're going to move this so that we have Active Trader Pro active. And I'm live. Put on Do Not Disturb. Okay. Woo-wee. Good morning. Your boy has blue on today because I've showered before the before starting this. Let's see. I am on early, I guess. But let's see. I mean, let's be honest. The morning, Dominic. How are you doing? We're going to start scans here soon, but I've got the TV on to look at the jobs report. And I want to look at Fool. Let's see, Fool.com. Latest stock picks. No, I don't want to sign up. I'm already a member, douche. Okay. How do I? This is so annoying. Where's the login? See, I can never figure this out. I'm just going to have to, hold on, I'm going to move you over to Fidelity. I'm going to go to my Gmail because it's in my Gmail. Morning, Brennan. I want to post in the Facebook group I promised to do it, but I didn't. So I want to post the Motley Fool article about Shopify because as someone who is cheap, I don't want people subscribing for something that I can give you for free, like a Motley Fool recommendation. Okay, so what I'm going to do, it's accompanied by a video, but I'm going to, let's see. I'm going to copy. I'm going to go over to Facebook. And I guess maybe somebody put something in here. Hit the thumbs up button, by the way. It's helping. I mean, I've gotten 30 subscribers. By the way, I am shocked at the response to the newsletter. And what I'm going, I do have to say that. Subscribe to the newsletter. And gentleman's agreement. Share it. Facebook, Instagram, Twitter, Snapchat, and TikTok. Okay. So. Suggesting to buy shop now. 60. There you go. Boom. I showered before, yeah. If that's what you're talking about. It's on a delay. So sometimes when Cleveland Cliffs is up 3%. By the way, all materials and shit is getting such a boost today. And by the way, my poor dog Penny. We went to the vet yesterday for went to the vet yesterday for shots, and poor Penny had an allergic reaction. So last night was fraught with fear. She threw up this morning, had some hives, couldn't stop scratching, was panting, probably had an extreme fever. It was bad, but she seems all better now. So, let's do some scans. It's 8:30, so hold on, let's see what I'm going to turn up the TV to hear. Let's see what the jobs report says. Jobs report is kind of key, so I'm going to write these down. I'm on a delay because I'm streaming off of a Roku. So if you've already got the jobs report, you know kind of what's going on. Let's look at QQQ live. It's crashing down. I'm waiting for Rick Santelli. Oh, fuck, it's strong. Holy shit. Morning, Q-tip. Rates are going up. Stocks should go down. But they're not going down. Oh. Futures are ticking down, but not by a lot. Okay, if you guys aren't watching CNBC, then that's exactly what I'm watching, CNBC. No, so here's the expectation was 139,000 new non-farm jobs added. Just to give you a hint, there was 130,000, expected. Actual 339,000. So triple. Our average hourly earnings up month to month, 0.3%. It's a fairly decent number, but it just means inflation is still here. And I don't think Active Trader Pro is actually streaming. Yeah, it didn't. It hasn't moved the market, so. Honest to God, I think that the markets overall, I think they're just saying F you to every data point. We're going to, pony money in. There was a report about $1.3 trillion poured into equity funds in the month of May. So I'm not going to bring up all that stuff. But the jobs report, great. Here's my notes. Jobs reports, 339,000 non-farm added. Incredible number. When it was expected to be 139K. But it means the Fed may raise rates, 3.7 unemployment rate. Jobs market is really good. Yeah. And listen, the stock market ain't hard to figure out. If you can talk like you have confidence, people believe you. That's why I say, number one rule, do not believe any douche on the internet. Number two rule is don't believe Jim Cramer. And if you guys didn't see it, I mean, there was a crazy report yesterday about a shareholder lawsuit on C3AI. I think it's on CNBC, but the markets, why is this not moving? Okay, Nvidia's moving. Let's see. Apple's usually a pretty... Let's see, Apple. 180, 128. Yeah, that's about right. I did not. That guy's fucking nuts, though. I didn't hear him. Because you know what, Brandon? Your boy isn't strong enough to go into Palantir. I'm dumb. Yeah. He's fucking nuts. I mean, he's just crazy. But, materials companies are moving really well. I saw Cleveland Cliffs is up 4%. I saw Rio Tinto, which we talked about. I saw Freeport McNamara. I saw all this stuff that was way up. Shopify's up 2%. Snowflake's up 2%. Hey, did you get Snowflake at 148? Let's see. I put NVIDIA, get it before it's 400 again. That's what I put down. Did you get Snow at 148? Like I said. Tesla. Did you get Tesla at 160s? Like I said. Let's see. What's another one? Uber at 38. It hasn't gotten to 40 yet, but get it under 40. Simon Property Group was up. Morning, Rosterman. Oils. Get your oil. Mark this day. Get your oil stocks. You want to know why? OPEC meeting this weekend. You want to know why? Saudi and Russia supposedly are getting along. And you want to know why? Because the U.S. doesn't want to pay this. The U.S., Biden is faced with a choice. Piss off his own party and continue on the energy kind of, hey, we're not going to drill in this country. We're going renewable. Or allow Russia and Saudi to basically manipulate the price of oil. MongoDB is a great company. And if you saw those earnings, they were crazy good, Rosterman. Here's the thing about MongoDB that you have to know. It lost $345 million. So, great. Kudos. Forward PE is 191. It's up 49% year to date as of yesterday. Today, God, let's see. MDB. I know it's a buy in the algorithm, so let's see. It's running now. It was a buy at 240. You're trading at 373 right now. So if you listen to the algorithm, boom. Yeah. They basically just guide crazy. The one that's interesting is Sentinel. Dude, Rosterman, is it over 1 year? If you're in at 85, I would. This is one of those that you could hold on to for a while. I mean, here, long term. Let's take a look at long term. We'll go to a weekly chart. You're not even, if you're in at 85, you got in way back here. Why didn't you start taking profits up here at 5? I mean, capital management, you got to start being better. If you're in down here, it's not, 185. It never got down there here. So you must be in back here. Let's see, 85 is down here. So January 2019, you are in long-term capital gains. Start taking some profits. You're paying 15% taxes on that. Start paying your profits. Just take the 1 year, start buying a little bit more. Start, when you sell one, wait 30 days, buy a little bit, or if you're not taking a loss, you're taking a gain. You could literally sell one share, buy another share. It will up your average thing, but you're taking 5, you're getting some powder. You can always, say it gets back up here to 371. 371, it's coming above this last one, so you're going to make higher highs. Your next resistance is going to be 465. Yeah. Yeah, so Rossman, it's a good product. Palantir, man, I'm telling you, Palantir, in a bull market, I will say this, Brandon, in a bull market, I love the CEO. In a bear market, that dude's fucking nuts. You can't argue with the stock price. I mean, the stock price is what it is. I say it's a $20 stock at $14.54. I might be tempted to put more money into it because I do think it's heading up back up there to $20. If they announce that they are cash flow positive, you're going to see this one at least at $20. The PE, look at MongoDB's forward PE, and then look at Palantir. They're both losing about the same. I mean, it's $100 million difference. Isn't a big difference when you're talking about billions of dollars. But this one was just beaten down too much. So I think both those, Rosterman and Brandon, I think Palantir and MongoDB, both really good. You talk about this. Remember, there's a couple of things. A good company with good products, good management, and good earnings. They don't have the good earnings yet, but look out when they do. Sentinel's the one that I want to look at. That is Sentinel 1, S. S is the symbol. This one is down 37%. It's going to open up at $13, which is down towards the December lows. I mean, it's giving up all of this year's gains. Make no mistake, that 15 cent share and the 15 cent loss per share and the guidance that was just horrific. There's no reason to get into this one. Kind of does bode well for the CrowdStrikes, the Palo Altos, the Fortinets, the Zscaler, whichever one you particularly pick. I have CrowdStrike and Palo Alto networks, both of those. I like both of those. But this one at $13, you're below the 200-day. Your 50-day is still moving positive. I think this one may, and I say may, because I don't think it's as good a company as Snowflake, but it's kind of similar in the fact that after earnings, you just get an overreaction. Yeah, Rosterman, it's bad. I mean, I shouldn't say it's bad. 190 estimate. Okay, it was 190 estimate. I need to alter my notes. I thought it was 130, but it's 190 estimate. Still, you double it. I mean, you almost double the amount of jobs that you're estimating. So yeah, I got some notes on this. By the way, if anybody listened yesterday, first off, hit the thumbs up button. Make sure you're subscribed. If you listened yesterday, and you took notice of Macy's, where the earnings weren't that horrible. Their guidance, hey, the algorithm still doesn't have you in. It probably will today. But let's take a look at a 5-minute chart on Macy's, because yesterday, here's June 1st. This was, let's say you opened up down here. You wait for confirmation. You get your confirmation at about 13.16. You went all the way up to about 14.16. That's crazy good. Morning, Uraj. Morning, Eric. Everyone I know is subscribed that's talking. So it's the people who aren't talking. Because I found out 40% of the people who join my live and stay on for at least 30 minutes aren't subscribed. So maybe it's just my voice is what you people like. Let's go full Austin Powers. Do I make you horny? Whatever. I am not good at that stuff. Okay, let's do some scans. By the way, what you're looking at right now, since 40% of you are not subscribed, is TrendSpider. There is a link down below for TrendSpider. US Seal Gaming, good morning. You guys used to subscribe weeks ago. Come on. Happy to have you, US Seal, by the way. I have a friend who is a US SEAL, former US SEAL, and fraternity brother. And while your boy here could never do a US SEAL training, he kind of told me, even in my peak physical condition, which at 52 years old, I am not at peak physical condition. But even at my peak, man, if you went through that SEAL training, that is just nuts. So respect. Okay, we got a lot of healthcare that's kind of crossing up here. You got PFE, Pfizer. MACD's crossing up, bullish. Walmart at 147, man. This is a $150 stock. I don't know that it's necessarily worth it. I think you take the risk on target. I think you do. I'm putting that note in. And J&J, I said, hey, anything under 160 on J&J, buy it. Just freaking hold it. I mean, this is as boring as you can get in healthcare. It is what it is. But yeah, and if you're not subscribed, subscribe. Come on, do your boy a favor. It's helpful. If you're a bot, F you. But hopefully you guys subscribe and you're not bots. The jobs number was crazy good, just so you know. Futures right now. Let's look. And if you don't know, dismiss. Futures are fairly good. The small caps are killing it, by the way. Up 1.14%. Your S&P's up 0.5. For once, your Dow and your S&P are actually, and your Russell are actually beating the NASDAQ. The NASDAQ might be taking a day off. Who knows? But yeah, the jobs report, if you join just for the jobs report, I'll get into it a little bit. But not much. I'm going to give you more stocks that you can invest in, and stocks that you want to stay away from. Dan Ives yesterday, and I'll go over it on the podcast. Crazy tweet, in my opinion. He upgraded C3 AI to outperform from neutral, raising the price target from $24 to $50. He says it's going to be a super bumpy road. They believe C3 has turned a corner and is ready to now capitalize on the $800 billion AI transformation opportunity over the next decade front and center. I kind of listened to a report on CNBC that was going over about how C3AI may be a fraud company because they were an energy company. Then when it turned into the Internet of Things was a hot thing, they turned into an Internet of Things. Now that AI is hot, they turned into AI. So they've constantly just been that. There ain't no way. There's nothing in the core portfolio that I got to restart this. But I do know the CEO who is interviewed on CNBC a bunch of times. I just don't have confidence in that dude. I mean, he talks about AI like, he's like I Hey, Chase, welcome back. Who focuses on finals, Chase? F that. School does you no good. I do you good. I'm kidding. I just had a bunch of friends' kids graduate from college, so I've been at graduation parties on the weekends. Fun times. And I don't know why there's no cross-ups. There's got to be cross-ups in here. I don't have J&J in there. But Walmart had a cross-up. So why is it not showing up in the core portfolio scan? By the way, I'll give you guys some work. Go and look up the 2 senators from your state that you're currently in. If you're foreign, Christian. Go and look up who your senators are. Go and look how they voted. Now, if they voted no just symbolically, give them a pass. If your senators posed a amendment, Tim Scott, I give not Tim Scott, the dude from Virginia. I think it's Virginia. The ex-president, who was it? Hillary Clinton's running mate. There we go. There was Walmart. That dude, I give him a pass because he's kind of right, semi-right. Not completely right in the fact that amendment should have taken place. He was trying to say if they build pipelines, there needs to be a delay in taking people's land and blah, blah, blah. There needs to be a review. Kind of get that. I mean, you claim eminent domain for a pipeline. It's a little sleazy. But he didn't want people getting taken land. So his amendment was shot down. I kind of get that. Still, no excuse to hold up a freaking debt ceiling bill. LNG, this one. Have we turned the corner on Boyle? I did get a question in the private Facebook group about Boyle, and whether it was time to invest in Boyle. I think I have it in my notes. No, I don't. No levered ETFs. We'll do Vanguard here. Yeah, Tim Kaine. That's it. Vanguard, VIG, VBK, VTV, VWO, VO, VSS. I'm going to put those secondary. Econ degree is good. I know, in fact, I went on a cruise. This time last year, I was on a Virgin cruise with friends, and one of the friends who was part of the crew that went, I think there were only 5 of us, but one of the guys who I didn't know until the cruise, he is a World Bank economist. So he works at the World Bank. He goes to OPEC, advises them on oil, things of that sort. Larry, So, and my cousin's son is getting a degree in econ. My take on econ, hopefully you're not taking loans out to go on an econ degree, but I think it'll do you fine. I mean, you'll let's put it this way. You'll be able to find good companies with good management, with good products, with good earnings after spending 4 years looking at the overall economy of stuff. Uraj, get out. Leave now. Nobody loves Jim Cramer. Nobody loves Jim Cramer. Inverse always wins. Go and listen to Inverse. Yeah, but Christian, here's the thing. In order, and listen, I could make a living doing sales. I don't like selling, but I could make a living doing sales. I couldn't get a job in marketing, which was what I wanted, even though I know I could do it. I needed that piece of paper. So I don't, my thing on the U.S. and universities and stuff like that, A, it's too expensive. B, and the guys on My First Millions, they said this. They said what's interesting about today versus just 10 years ago is that even someone who can't afford the actual going to Harvard and getting an education there, all of Harvard's classes are online. So you have access to Harvard's classes online. You can get a Harvard education even if you don't get into Harvard. So, listen, the opportunities today are different. I mean, my day, I'm 52. I'm way older too old to go to college. I have no attention span whatsoever. I can pay attention to nothing. That's shocking to me that there's no spider sectors. But we're in a bull market, by the way. I need to look at those spider sectors. Let me look. XLC, you should be in there. Yep, you're in there. XLB, ooh, that's about to cross over. This is the consumer staples. XLE, about to cross over again. You're probably out. XLF. This one, I think it was Joe who posted in the private Facebook group that he got into DPST. We went on a run yesterday. Wow, and look at this. This is my personal list. XLV. XLV has a cross up. Why did that not show up? Hold on one second. Shit. The scan, man. Why is that not? It's not showing up. Okay, let me put these down real quick. LMND. McDonald's cross up. JP Morgan. Royal Caribbean. Deere. Jumia. I hate sending people into Jumia. Zoom is just way too expensive. BIIB, I don't like that one. KWeb, China. China ETF. BABA. Oh. Let's see. Did you get BABA under 80, like I said? There's been a lot. Here's Cigna. Cigna has a cross up. We're going to put that in. ARKG cross up. SMMT. PBW. This is the Permian Basin. I'm not putting that in. I'm not putting that in either. Okay. Let me go back to the sectors because There is one that should have shown up on here. Yeah, I mean, here's the thing. There's jobs that nobody wants to do that will pay well. So I just, there we go, XLV and XLU. I didn't think it. Let me go back to the levered ETFs because I think this scan is messing up. It's not scanning correctly. Today's job world is, for me, and remember, I'm not in the job world, so it's just from an outsider standpoint, better than it's ever been for you to choose a job. I mean, shit. So in 1993, I went on what's called semester at sea. And if you have kids, and Chase, you're in college, look up semester at sea. I learned more on 6 months on a boat than I did in 4 years of college. About the world, about people, about the economics of the world, by going and seeing it. And it costs a fortune, an absolute fortune. It's a shame that, typically it's only rich people that get to do this kind of stuff. But it's, God, so rewarding. But if you have kids, if you have, friends who have kids, if you have, if you're in college, if you're in high school, go semester at sea. Just Google it. I'm telling you. That's one that I would say, if you want to take a loan out, that's a good investment for you. See, and I'm still not seeing levered ETFs so well. Let's see the Dow 30. I'm not going to go to ARK because there's going to be a ton. We'll go Dow 30. And while you guys are here, hit the thumbs up button. Make sure you're subscribed. I'm here every day. Usually, TrendSpider is not this slow in scans, but for some reason today, what I'm going to do? I'm going to log out. Let me move you over to Fidelity real quick. You can watch Apple because you know what? Your boy is long Apple. If you're new here, just know Apple is about 40% of my portfolio. It is a savings account. There's no reason that you shouldn't have Apple in your portfolio at all. It is amazing. I'm going to stop that, and we're going to go down to Dow 30. There's Dow 30. There we go. Yeah, we don't have enough houses. And there was a good debate on this morning about who's running the show. I mean, people going back to work. It is interesting. There was an international employment consultant, and she was saying yesterday, and I don't know if I saw it on YouTube. I don't know if I read it. I forget. But I remember her face for some reason. But she said, America is the only place in the world that has not gone back to the office. And that is fighting going back to the office. And that companies are willing to put up with people who don't go back to the office. And the question really comes down to who runs the show. And it's kind of like, there's unions and stuff like that, but who's running the show? Is it employees or is it employers? Is it more important for an employer to have employees, or is it more important for an employee to have a job? So I think it's a interesting dilemma. But maybe Chase, come back 2 years, 3 years when you graduate. Give us the scoop. But it is interesting. And again, I kind of say this. I don't know people who aren't clamoring to work at Apple. I don't know people who aren't clamoring to work at Microsoft. I don't know people who aren't clamoring to work at an AI company. Since it is so hot and they're paying. I mean, shit, put AI on your LinkedIn. There's my challenge. I've done it. Just make up a job. Remember, LinkedIn is not your resume. There's nothing illegal about putting something on your LinkedIn. Put AI on there. Put AI prompt specialist. I think that's what I put. You will immediately get 6 to 8 recruiters calling you, saying, "Hey, how can I help?" Rosterman, I lived in St. Augustine, Florida. And I actually looked at potentially moving back to Florida for tax purposes, specifically. Not that I am a super fan of your governor. Don't mind him, just think he's a bully. But I think he's just as bad as the rest of them, to be honest. JD. Look at T-Mobile. Why is T-Mobile down 7%? Something happened with T-Mobile. And they have a MACD cross up. It's down at 129. I mean, this has just been, let's see, JD. T-Mobile's a good company, and I know that Verizon and AT&T yesterday had cross ups. AZN. There's a lot down today, but there's a lot up. Kraft Heinz, I think, paid me a special dividend yesterday, or they announced a special dividend of 40 cents. Housing prices are super high, even here in Atlanta. I don't know how much I'd get from my house, but I guarantee it's worth more than I paid for it. So, IDXX. We'll skip that one. Let's go. I'm going to create a AI watch list. Lockheed Martin. Wow, there's a lot of these that. KHC, Lilly, Visa, Citigroup, UNP, GE had a cross up. If you haven't seen GE, by the way, holy hell. That stock, I mean, look at this chart. Just look at that chart. I mean, that right there. You've almost doubled your money, and it's in a company that's just rebounding. Now, here's the killer. Look at that. I mean, this goes back to 2017. If you get back to those levels, you are doubling your money from here. So it hasn't even come back. I think there's significant resistance at 115, the 110 area kind of area. Because if we put a range in here and we say there's 1, there's 2, you can see right there. If we there's 3 points at least there. And let's go down to a little lower to where we'll have, I mean, I think the range here is 123. I think you'll get there, but that's just such a great chart. Remove all. Yes. Duke Energy, we talked about. God, it's below 90 now. Altria Group, I just won't invest in. EMR, Emerson Electric. This is kind of just utilities get tumbling. Let me go back. Since now it seems to be working, let's do the spider sectors. Or no, which one? The levered ETFs came up with nothing. Let's see if something happens. Because it was going fast on the S&P and stuff. It just seems like it's going slow on the created ones. Okay. AVGO earnings, DPST, Macy's, Shopify. Okay, does any likes your post? Okay, those are just likes. Let me get. This is. We will go to. There. It is very simple. Let me see. I have a problem with branding. Branding my if you go to dailystockpick.substack.com, you can have access to my my newsletter, daily newsletter, where I take my notes from the podcast and I put them in a newsletter format. So it comes to your inbox every day. So if you don't get the chance to listen every day, it's a great way to take a look. Let's see. I'm going to put in. Bottom yet. Okay. Okay, I'm going to start the podcast here since everybody's listening. If you are not subscribed on YouTube, subscribe. I am here every morning. This is TrendSpider that you're looking at. I've got 2 algorithms, a 4-hour algorithm and a 65-minute algorithm. The 65-minute is great for day trading. The 4-hour is good for finding entries and finding stocks that you want to swing trade. Probably not day trade, but still good for day trading if you get some big pops and some triple levered ETFs kind of things. But this is just a look at Apple. Like, for instance, got you in here at 127, got you out with a 17%. I talk about button hooks a lot on the top. You can see a little hook there. You can see a little hook down here. Get you in, get you out, 17%. Got you in at 153. You're still in this bull run. You're at 180 right now, 181.21 in pre-market. The RSI is just super high. But this is TrendSpider. If you subscribe with the link below, you get 25% off. I will give you access to my 4-hour algorithm, the 65-minute algorithm, all the watch lists that I have. We have the Daily Stock Pick Core Investment Group, which is just the 30, 35 names that I say, hey, this is what you should invest in. Energy names that I trade and own, particularly levered ETFs. So anything from a 1.5 like TARK, or, some of the single stocks like NVDS, NVDL, things like that. Levered ETFs to trade. That's just a great group to look at. Low-cost Vanguard ETFs, if you just want to sit and look for entries into Vanguard, you got that list. Spider sectors. So if you like a specific sector, like I think energy, XLE will be good. XLF, they've just been beaten down too much. You get all of that. Plus you get my scans, and you just saw me go through scans. Sometimes it's a little bit slow. Happy Friday, William. But TrendSpider, I can't say it enough. It is essential to my trading, to my tracking, to my portfolio management. And kind of Rosterman, I told you, now here's what you have to know. It's about $400 a year, depending on the discount that you get for the elite level, which is the middle level. You need that for the algorithms. If you don't want the algorithms, you can absolutely get it for charting. I don't think that it's worth it. But in my mind, that middle level is the kind of sweet spot. That's exactly what you want. So at $400 for the year, I would say minimum portfolio you're trading is $5,000. It's less than 10% of that. I think you could make that back on a $5,000 portfolio in a heartbeat. $1,000 trade using the algorithms could probably get you something like, $100. I shoot for 10%. So if you have 4 wins, $400. That's why I say $5,000 portfolio. If you only have a $1,000 portfolio, do not get TrendSpider. Go over to TradingView, find yourself a charting program that works. Once you get your portfolio built up, then you can use TrendSpider. You will see it's the creme de la creme of actual charting stuff. So I love it. I can't live without it. That is why it is the only thing that I sell. The only thing that I sell. I say Verizon, Visible is a sponsor too. I don't sell that. That's just a referral program. TrendSpider, I'm partnered with them. I'm a VIP partner. So love those guys. In fact, I have to send them some product suggestions that I have to make things more plug and play for you guys. They've taken my suggestions. So rather than me sitting there for an hour with you setting your strategies up, I'm able to just send you a welcome letter, PDF with all the links that you need. So it is semi plug and play. But I have a great video on YouTube to show you how to set it up too. And with that, I'm going to start the podcast. So let's see. Good morning. It's Friday, June 2nd. Happy Friday. Happy June Friday. It's also Jobs Report Friday. Wow. Jobs Report. We expected 190,000 jobs. You got 339,000 jobs. A 3.7% unemployment rate. What does that mean? Well, the markets didn't react, which is good news, I guess. But it kind of indicates that, hey, if we don't have a pause next week with a good job market and inflation going up, and they actually wind up raising rates, I think you could see the market come back and maybe take a little leg down. We talked about SPY and QQQ, the key points. Let me get this out of the way first. 2 things. First thing, thank you everyone who subscribed to the newsletter. Overwhelming support to the point where Substack emailed me and said, "Hey, who are you? What are you doing?" 2 days, absolutely killed it. The first day was great. Second day was even better. Go to this link. It's down below, but dailystockpick.substack.com. The newsletter, you can subscribe. It will show up in your email box. Whether you listen or not, it shows up in your email box. It is my notes that I use to go over this podcast. Now, here's my ask. Once you subscribe, this is a gentleman's agreement, which means this is like a handshake. It's not a contract. I can't come back to you. You guys don't pay me for this. But what I want you to do, and the gentleman's agreement is, share it. Share it on Facebook. Share it on Instagram. Share it on Twitter. Hell, share it on Snapchat. Share it on TikTok. Tell people, holy crap, this guy's been on a roll. He's been hot. He sent me into NVIDIA. He sent me into Palo Alto Networks. Sent me into Tesla when it was 160. All of the stuff that I send you, just share it. Just share it. Anybody that you know who wants to get into investing, if somebody comes up to you at work and says, hey, I got a hot stock tip for you. That's the dude. Just go, hey, Gary's got him. Go and subscribe. It's free. Doesn't cost you anything. I've had a bunch of people pledge $80. And I think if I turn on, I have no idea. I'm a boomer. I have no idea how this works. But thank you, everybody who pledged $80. Thank you, everybody who subscribed. I really appreciate it. Second thing, the debt deal is done. It passed the Senate early hours this morning. I think it was like 3 o'clock in the morning. How these fucking boomers stay up till 3 o'clock in the morning debating shit, I'll never know. But there were a ton of Senate douches who voted no. This is your homework. Go and find out who your 2 senators are. Find out how they voted. There were a bunch of no votes. If it was a symbolic no vote, I kind of get it. If it was a no vote because they would have rather defaulted, that's a douche who deserves to be voted out. Go and do your due diligence as the elections are coming up next year. So, jobs report. Those are the 2 things out of the way. I will get off my soapbox about the politics of stuff, but it does make a difference. Now that the debt ceiling is out, we can move on. Short-term bond rates are still at like 4 and 5%. In fact, let's just go. Let's go over here to Fidelity and take a look. We'll refresh this page. If you are a Fidelity customer, this is just under news and research and the fixed income bonds and CDs. You can see 3-month at 5.3. That's the CD. Let's look at the Treasury. 5.35, 5.4, 5.3 for a 9-month. 1 year is 5.2. 2 years, 4.49. 4.49 versus the 10-year. And that's the big difference. When you hear inversion, it means the 2-year is paying more than the 10-year. That has been inverted for 1 year now. Typically, an inversion precedes a recession. We have never been inverted for this long. So it's a little bit scary, but now that we got the debt ceiling out of the way, I think the short term winds up paying a little bit less and the long term starts paying a little bit more. I think that's what that does. That we'll have to watch it, but that would be my guess. So SPY, we closed at 421.81. Remember, the key point was 420 on SPY. If we go and we look at the weekly, it's got to close the week over 420. Doesn't mean we're out of the woods, but if we close over 420, I think you've got 450 in the bag. I think you could be going towards 470. Again, it's long term, so will it pull back down here to the 50-day? You're seeing the 50-day turn positive, and this is on a weekly. The 200-day, absolutely positive. I mean, I'll tell you, the only couple of times that it's gone under the 200-day, if you get under the 200-day, load up. Load up. October 2010, load up. Now, the housing crisis, if you go back here, can we get on a weekly? It's 2011. You did get close to the 200-day, just broke it. 2016, you got close to it. 2018, when they started raising rates, you got close to it. But again, we were close. We broke it in October. We're off to the races. So I think we're in a bull market. We still haven't reached the all-time highs, the all-time here in January of 2022. You can see, as far as SPY goes, we're right in that volume level right there. So we're just above it. We're setting new volume level shelves to provide support. Old resistance provides new support. If we close over 420 on SPY, we're off to the races. QQQ, same kind of thing. Now, it doesn't mean we won't go down there a little bit, but you got to have your stop losses on. QQQ, it's close to 352. You're at 353 pre-market. If we go to the weekly, it's kind of the same thing. You've gained back about half of what you had in December 2021, January 2022. So I think the next leg for the QQQ is 372. That's just a look, just an observation. I think it's good to look at that stuff. Do I invest in these? I do. I try and put some money into, as I get older, I put money into these ETFs and these kind of tracking. You want to track the S&P 500. You want to track the NASDAQ 100. You want to track those things. Fortunately, I have been heavy in tech. Last year, I took it on the chin. I'm still heavy in tech. Took it on the chin last year. But overall, incredible performance just in tech. And I think you're at the beginning of the AI revolution. So I do focus on tech if you're new here. AI. There was an incredible tweet from Dan Ives yesterday. And he's an analyst, but it was on C3 AI. C3 AI, here's his tweet. Upgrading C3 to outperform from neutral and raising the price target from 50 or 250 from 24. He doubled his price target. While it will be a bumpy road, we believe C3 has turned a corner and is ready to now capitalize on the $800 billion AI transformational opportunity over the next decade. So the $50 price target doesn't mean it's going there today. Yesterday, you got to about 41, 42 right before earnings. It crashed on earnings. It got all the way down yesterday in the morning, down to $30.26. This is a $25 stock. You don't touch this until it gets to 25. Today, it rebounded a little yesterday to 6.56%. That's what Dan Ives means by a bumpy road. The RSI is in no man's land. That MACD is way too high. They lost 13 cents a share. Here's what you have to know about C3 AI. There was a CNBC investigation on yesterday, right after Dan Ives made this tweet, ironically. about how C3AI may be a fraud company. If you remember C3AI, short sellers Hindenburg Research covered them and said it's a complete fraud. They were an energy company. Then when energy kind of went out of posture, they went to IoT, Internet of Things. Well, Internet of Things didn't turn out to be so good, so they went to become an AI company. And AI has done well for them. So the symbol AI, they got it. They got in early. They've gotten the pop. If you listen to this, the CEO, this guy doesn't know AI. He's talking about Google search boxes. This dude does not know AI. So I do not think, unlike Dan Ives, in my mind, I think this is a trade. It's not a buy and hold. Could this go to $200 at some point in time? Probably. If they've gotten Dan Ives and those guys to buy into AI, you're up 210% this year. This thing was an $11 stock, $11 at the beginning of the year. They're losing $262 million. They have cash on hand, $7 per share. They have 111 million shares. So 111 times 7, that's 700 million. You're losing 262 million. They don't have a forward PE. Their sales are 266 million. So they're going to have to double their sales in order to actually start to make money. They're only projected to increase their earnings by 30%. They're not close to making money. That's what you have to know. The average price target on this, even with Dan Ives moving it from 24 to 50, the average price target is still only 19. 25 is your absolute top that you should pay for this. Absolute top. Look at everybody selling at 30. The director sold at 42. Option exercise of 120,000. He turned around and sold it for $5 million. Director sold at 30. These guys are selling at lower rates, but the big money was this one, May 30th. The director just optioned his options exercise of 120,000. He made $5 million. So I want you to trade that one. When you hear about AI, you want the picks and your shovels. You want NVIDIA. Now get NVIDIA under 400. It's trading at $400.96. Just buy it under 400. We are after the 3-day rule. We did not touch this gap. This gap at 367, I said, if we touch that, you're in trouble. The gap up from their earnings was between 307 and 364, 365. You didn't touch it for the last 3 days. We're off and running. NVIDIA is as cheap as it's going to be. Get it under 400. That's where I want you to invest. DPST, we talked about some of the regional banks having problems. Do not hold this one over the weekend. It had a really good day yesterday. It's up another 5% today. This one, it got you out in the algorithm yesterday with a 25% gain. I don't want you to hold this one. On June 5th, there is a reverse split 1 for 10. If you own this before that reverse split on June 5th, you're going to get kind of screwed. Just putting it out there. Reverse splits have always gotten me, especially on triple levered ETFs, always gotten you screwed because these are decaying assets. Trade this one. If you want to own a financial, Schwab. Get Schwab under 50. It's at 53 right now. Are you doing yourself a disfavor by buying at 53? No, because if it goes down to 49, you just load up a little bit more. But in the financial sector, those are the two that I would say. The ones that I own in the financial sector, I own Bank of America under 30. It's trading at $28.14. I think my average purchase price is about $29, so I'm not at the price, but it's a long-term buy. I identified it for 1 year. Morgan Stanley is another one that I own. I have not done well on this one. I think my average purchase price is about $88, $89, somewhere in that neighborhood. I've been buying it on the way down. I like the company. They bought E-Trade. I think it's a good company. I just think financials have done poorly. And another one that I would recommend is Citibank. Citibank, ironically, it got a buy today, 45.05. I think anything in the low 40s on Citibank, I think you're doing yourself fine. I think it's a $50 stock at some point in time by the end of the year. So if you want to buy Citibank, you can. The other one that I own is Wells Fargo. Wells Fargo under 40, great buy. It's trading at $40.55. My average purchase price, I think, is like $39 because I've been just adding to it. So from a financial standpoint, I think you're good. Now, here's what you have to understand. We're past the debt ceiling. So from a financial standpoint, they may actually get a boost. And they've been underperforming this year. If you were listening yesterday, I said Macy's. I thought it was a good buy at $12. It came back yesterday. It had a 6% period yesterday, 12.80. It opened up at 13.08, so you could have gotten it under 12. I said, hey, anything under 13, I think you could get it. I think it's a $20 stock. Go on their site. Go, download their app. It's a great e-commerce experience. The problem is, again, you look at $188 per share, 56 cents per share. The consumer is not shopping at Macy's. But I do think that they will return. The problem is those bottom level consumers that are typically at Macy's, they just weren't showing up. It's the slowing economy. It's the higher interest rates. It's the return of student loans. All of that. They've got a good dividend, and June 14th is their ex-dividend date. So if you buy it before that and you buy it at 13, at some point in time, I think you get to 20. Your dividend is 4.81. So you're getting a decent dividend, while I do think that you get back to that 20 level. The problem is that if you get back to that $20 level up there, it's got to be a good economy. So if we go into a recession, you might be able to get it cheaper. But personally, I use Macy's. I like Macy's, so I'll probably buy it. I posted on our private Facebook group. If you don't know, my dad, who is older than a boomer, subscribes to Motley Fool. And Motley Fool came out with an email yesterday, buy Shopify. I've been saying buy Shopify under 60. It is trading at 59.29. I think anything under 60, I think you're fine. If it gets under 50, you're doing even better. I don't think it's going to go under 50. Under 50 to back down to 40. So if you get it in the 30s, you're good. Here's the post in the private Facebook group. What I do is I just go over to Motley Fool, I copy and paste. So get subscribe to our private Facebook group. It's like having an $80 a year Motley Fool subscription. I think it may actually be more than that. I think it might be $700 or something. They pay a lot for it, but I get to read it. I share it with you guys. I put it over there. So another reason to get into the private Facebook group. And maybe I'll just post it on the, I can't post it because it's plagiarism kind of thing. The Facebook group is private, so I'll do it. They may redact the membership if they find out that I'm doing that kind of stuff. But Shopify, I think anything under 60. This gap right here between 48 and 53, you can see it's kind of sliding there. I would not add your entire lot position at 59. I would add 10%. If we get over 60 and this MACD crosses up, when that MACD crosses up, get ready for this one to just rise. You can see it's just kind of been slowly rolling down, and you have had more selling than buying. But the volume, I think it's going to come back. There's no real catalyst, but you can see if we move this one back here, most people are holding down here from back there between 45 and 49. These volume shelves are just beginning to build. But there's a good volume shelf level here at 57, which should provide some support. Solar stocks, they've been slowly coming back. Enphase, the algorithm got you in at 161. We went over this. I said it's a $200 stock at 161. It's going to be good. It's 180. So you've got your 10% if you want it. This is a great, if you don't know anything about solar, Enphase takes electricity off of solar and turns it into energy that you can use it. Every solar panel needs an Enphase inverter. So I think they have some competition, but nothing touches Enphase right now. The problem is that you have had a falling knife on this one. There were some thoughts that perhaps the Republicans would pull back some of the solar incentives. You've gone from $320 down to $182. You're touching on the weekly. That 200-day, which is at 150, I think you're fine buying it at 180, to be honest. Sedge, SEDG. I need to change this. It is under 300 again. It is at 296. SEDG. There we go. You can buy this one under 300. We've gone over this. This is the line. This is the line at 300 right there. So if we go 4 hours right here, you've had a chance to buy it once, sell it up here. Twice, sell it up here. I wouldn't have bought it here. Buy it here. 3 times. This is just this year. Sell it up there. Buy it down here. Sell it up there. Buy it down here. Sell it up there. Buy it down here. Sell it up there. You've had multiple opportunities to buy this under 300 and sell it over 300. SEDG. I've traded this one many times over the years. It is a company that will absolutely explode. You can see it started to touch this. It will come back down here at some point, 267. But if you buy it under 300, you will have a chance to sell it over 300. AVGL, Broadcom, they had their earnings last night. They did really good. The problem was it was down. It's back up. Get this one under 700. It's at 811 right now. They made $10.32 per share, $10.33 the previous quarter. Their ex-dividend date is coming up on June 21st. Let's see what the dividend is. It's not a bad dividend, I don't think. It's 2.33%, so it's kind of average. But this is probably your best value in chips to be in the AI space. And when I mean value, look, the PE is 26. The forward PE is 18. Let's look at a company like NVIDIA. Remember, 26.18. PE on NVIDIA is 206. The forward PE is 40. So you're getting Broadcom at about half the price of what you're getting NVIDIA at. AMD, the PE is 495. Forward PE is 28. So you're getting the best value right now. And by the way, that PE and the forward PE is how good the earnings on NVIDIA were. It went down in price. Remember, before those earnings, NVIDIA was significantly more expensive from a PE standpoint than AMD. Now, AMD is the most expensive chip out there. But Broadcom, AVGL, it is trading at $806 now. It's moving a bunch. The average target price is $701. There haven't been any new people, but I think over the next week, you're going to see new analyst recommendations on this one. It's up 41% year to date. They're expected to continue to grow. Earnings per share this year, 76%. So I think this may be the best way. If you haven't gotten into chips and you want to get into chips and you want just a steady grower, we'll show you the weekly chart on this one. It's a good one. Again, if you're not on the AI train, you better get on. The train has left the station, but there's still cars that you can, you ever see in India where the trains are moving and they don't really stop at the station. People just run along to get on. That's AI right now. The train is AI. If you're not on it, you got to run to make it. But AVGO, I like that one. MongoDB, MDB is the symbol. This is a database company. It's data. It's going to gap up. Any reaction in the market is an overreaction. The earnings were so good and the outlook was so good. It closed here at about 300. It's almost at 400. This is close to NVIDIA kind of level. It's hype, but it's good hype. Their RSI is at 88. I would not be buying this up here. It's still not a horrible, it won't come back down here to 300, but I think you'll be able to get this at about 350. Just again, it's going to come back. I think from a long-term perspective, I think you're just gapping up way too much because look at that candle right there. That candle right there is this week, 34% range candle. The RSI, even on the weekly, is at 77. You're just crossing that 200-day. The all-time highs on this one, 554. So even if you bought, say, at 388 today, are you crazy? I think so. I think you'll get back down to 350. But for a company like this, I think you'll get good companies with good earnings, and make no mistake, this company's making money. But good companies with good earnings, well, they're losing $345 million, but their earnings per share, they do make earnings per share. Let's see. It says 56 cents. So it's just a data thing, but it's up 49%. Their PE, forward PE is 191. So it is expensive. But their earnings per share next year expected to grow 50%. Earnings per share this year down 5%. And we just had somebody on Rosterman on YouTube says he uses the product. Now, what's crazy is Guggenheim downgraded it. Look at this. This was just May 26th. Neutral to sell to a $210 price target. Dude, you should be fired. I mean, Guggenheim should, whoever did that, absolutely fired. Let's see the insiders. Insiders are selling at 250. But they're putting in pools. The CRO, Chief Revenue Officer, he sold about $3 million. Chief Technology Officer sold about, this guy, President and CEO, he sold at 220, 227. Yeah, douche. $11 million worth. He's kicking himself now. It's at 338. So maybe they needed payments for a house. You just don't know. Zscaler, we went over this one. This one had earnings. It initially was down on the report of earnings, way down on the report of earnings. I think it was down around 120 something. It's up 5% at 142. So it's doing well. Consumer, Lululemon reported. Now, for me, I said, hey, wait for Lululemon to get back under 300. After the last earnings and the last gap up, the last gap was 320 to 356. This one got down to 327, so it didn't fill this gap. I was waiting for it to fill this gap. I missed it. Both the bottom and top line, earnings per share and revenue, beat $2 billion in sales. Digital sales was the only section that was down. It popped off at 320. Which was where I saw it gap down to. I thought it wanted to get to 320, didn't get to 320. You're going to create a whole new gap. And that gap is going to provide two gaps here between 357 and 332. There's going to be double gaps there. It's going to come back down. So if you're buying Lululemon today because the earnings are great, you're not doing well. You're not doing well. TQQQ. I talk about this one a lot. Don't hold it over the weekend. It's at $37. If you're in on this one, I would not hold it over the weekend. We've had a great week. The RSI on the 4 hours at 78. I would be happy to take your profits. The month of May, if you bought April 26th to May 26th, a 28% gain. While you could get that in June, I just don't think it's the reality. I think you're fine holding this one. Or selling this one and buying it at a cheaper price next week, because there's no way you're holding this for 1 year. Just don't hold this for 1 year. So your short-term capital gains, or if it's in a tax advantage like an IRA or something, use it like that. Just don't hold it for a long time. I'd hate to see you miss out on those profits. The trading desk, TTD. I like this company. The only problem with this stock is it's expensive. But it is up 6.5% today, and it is continuing. If you followed the algorithm and you got in at 64, you're at $78 today. The RSI is super expensive at 80. It's a good company. It is just expensive. If we go to the trading desk over here, full disclosure, family friend's son used to be the CEO or CFO of this company. He's now CEO of Expedia. But the PE is 512. The forward PE is 50. They're making $77 million. They have a $35 billion market cap. It is up 63% this year. So it's crazy, crazy good. If we take a look at a weekly on this one, this was a long time ago, I think in 2021, or even maybe it was 2019. Motley Fool recommended this at about $18. You're at 78 right now. It came down hard last year. You're just over the 200-day. Even if you buy this at 73, Its high is like 107, so you still got 30%. But that was way back in 2021 at the peak. So it's still going. I just like it. I bring it up just for that. NVIDIA, get it under 400. Let's see. Is it under 400? I think. Yep. It's under 400. Just buy it under 400. You'll be fine. For the long term, I think you'll be fine with NVIDIA. It's at 398.95. Just put it in for 390 today if they continue to go down. Cleveland Cliffs. Cleveland Cliffs is up 3% today. This was up about 4 or 5%. The question is, have we reached a bottom on this one? I don't know. I mean, the algorithm still has you out. The MACD is probably going to cross up. I'll probably add one, here it looks like it's putting in capitulation here between 14 and 15, and you're right in between. Remember, the CEO bought a bunch at about 15, trying to call the bottom. I think he may have called the bottom. Likely 15 is the bottom. So a couple of stocks to pat myself on the back. Snowflake, did you get in at 148 when I told you? Because you're at 180 right now. After they reported earnings, I said this was any reaction in the market, overreaction. Don't worry about it. But 148 was the buyback here, April 27th. I don't know that I would have gotten in there. I also know that I probably would have sold up here had I had that gain. But your boy is in this one for about $200. I don't have the money. I don't want to sell it because the money's not going to go anywhere else. It's in a retirement account, so it's not doing me any bad. I just add to this one every now and then. I did add about 150, so I haven't gotten the full gain. But if you added to that one, great, you're doing well. Now, another one. We talked about Tesla having on average 100% win rate in June. I said get in at 160, 163 was where the algorithm got you in. 212 is where you're at today. Great gain on this one. I think you're going up to this gap up here between 258 and 267. In my mind, I think you're running there. We will get sales numbers, I think, tomorrow for the month of May from Tesla. He just brought the price down on the Model 3 again. So, and to end off the pats on the back, Baba. I said get in under 80. 83 is where the algorithm gets you in at. 83.59. I mentioned it back here at about 79.20 something. The earnings, they did go down on earnings, but let's take a look at a weekly of Baba. Do you think Baba has grown since 2017? Because that's where it's trading right now. The roundabout here, crazy. The problem is you're getting to higher. It's not making higher highs. It's making lower lows. This one back here in October at 58. Great play because you could have gotten it to 100. Great play on that one. Don't know if I ever would have seen it. Microsoft, new price target from Evercore. Microsoft, it's based on AI. Evercore said price target is now 400. It's at 334. Honestly, you're probably coming back to, I would say, about 315, 320. That volume shelf right there, I think that's going to provide you support. I think if you're in this for a long term, 334 isn't horrible. The ex-dividend date just passed. So I bought a couple of $1,000 more just on the dividend because I auto-invest dividends, reinvest dividends. So Microsoft up on that one. Oil. I think oil is going up. And there's an OPEC meeting this week. It's got to catch up to the rest of the market. I told you to buy PXD before the ex-dividend date at below 200. Get it in for 199. I have a bunch of this. I've added about 2 out of my 10 lots, so I'm not completely in it. But while I'm waiting for this to go up and I'm sitting at about 200, I'm getting paid an 11.55% dividend. It's better than bonds. It's better than anything, that you can get in savings, 11.55%. So if you didn't get the ex-dividend date, make sure you're adding this under 200. Oil at some point in time, I think later this year, oil is going to start taking off. The OPEC meeting this weekend, it's Russia and Saudis are said to have been getting along. Well, if the Russians and Saudis are getting along, we just opened up some drilling restrictions in the new debt ceiling bill. So we're going to start drilling a little bit more. Remember, under Trump, we were drilling everywhere and everywhere. And we were energy independent, and we were actually competing with OPEC as providing oil to the world and to us, specifically to us, and making energy cheaper. I think that's a good strategy. The environmentalist in me says, hey, just make sure you're doing it safely. And they weren't doing it safely. The regulations just were not there. Honest to God, I invest in these guys. I just don't trust them. If they can make a dime off of it, they absolutely will. They will kill the environment. They will do whatever. They're not out to look for the environment. They're out to look for shareholders. So that's my take on OPEC. I am staying in oil. I still have Exxon. I still have MPLX. You can look at the core portfolio in TrendSpider, MPLX, Oxy. I have Devon, PXD. I don't have PXD in the core portfolio. I should probably put it in there, but I haven't. I just, again, I'm waiting for it. I'm sitting there. I'm just waiting for the 11% dividend. I think if you're younger, and most of my audience is younger than me, so I haven't put it in there for that reason. Okay, let's talk about scans. First one, Pfizer. I own Pfizer. I've ridden it all the way down from $50 down to $37.99. Pfizer is more than a one-trick pony. They're just not getting the COVID revenues that they were. The problem that I have with Pfizer is the problem I have with most of the drug companies, is they just didn't say what they knew about the vaccine. It's not that the vaccine is bad. They just didn't say what they knew. Honest to God, when you first remember the vaccine came out, and they said if you get the vaccine, it's going to be like chicken pox. It's going to be, once you get the vaccine, you will not get COVID. Well, what happened? People with the vaccine started getting COVID. Well, when did they know? They didn't tell us. They kept denying that that's true. And it's not just the administration was listening to Pfizer. They weren't making this stuff up. They were listening to Pfizer. So that's the problem I have with Pfizer. Do what you want with it. I own it, but it is less than, I think it's 4 figures. Not 5 figures, it's just 4 figures. And I've held it for a long, long time. Walmart. Walmart has a cross up at 147. I don't think it's a bad play. If we are going to a recession and Walmart's turning around, I think you're looking at about $160 stock at some point this year. I just think it's too calm. And remember, they rely significantly on groceries. And so if you look at Walmart, it's 52-week range. You're just 3%, 3.97%. The 52-week high is 154. So I don't know that I'd necessarily buy it up here. If you're thinking of buying Walmart, and I'm going to say this, I think you take the risk on Target. Target is up 1.37% today. You're seeing a button hook. See that button hook here on the MACD? The MACD is going to cross up. At 133, I think you take the chance on Target. It's just too cheap. Target, okay, the PE on Walmart, 35. 35, the forward PE is 21. 35, 21. The PE on Target, that was the 35.21's the PE and forward PE on Walmart. PE on Target, 22.12. It's half of what Walmart is. Now, do I think that there's a bunch of Karens out there who aren't going to Target because they're afraid their kid is going to get influenced by a swimsuit? Soccer moms that I know are still going shopping. So they love freaking Target. That's just my opinion. I think that you do that. J&J had a cross up. And there's way too many names, by the way, on this. J&J had a cross up. Here at 154.72, this is another boring one. I say get it under 160 if you want to just sit and hold it. It's a mainstay. It'll be fine. Schlumberger, SLB. This is one I've talked about. I think within the energy sector, I think this one's been beaten up enough. 44.98 is the buy, just like 44.02, 44.98. Your ex-dividend date is June 6th. I think you'll be fine in this one. Honest to God, you're 23% off your highs. You're 49% above your lows. The PE is 16 and 12, so it's a little bit expensive. But remember, these guys are selling software services to the oil and gas industry. It's got a 2.22% dividend yield. So it's not a horrible thing. It's not something where you should run to it like you should PXD, but it's good enough. LNG. I don't know. Is it time to swing on Boyle? LNG is Cheniere Energy. This is a liquid natural gas company. That's thus the symbol LNG. It has shot up. 141.96 was the buy. It's at 145 right now. I think at some point in time, and I don't know if it's now, but you go and cover this 160 to 163. It's an expensive stock. Make no mistake about it. The earnings are really good on this company. Their income, $7.73 billion. PE is 4. Forward PE is 11. So it's still a little bit expensive on the expected earnings. Year to date, it's down 3.51. They pay a 1.11% dividend. Boyle, on the other hand, if you want to go short term and trade a triple levered ETF on the future of natural gas, it's up 5% today. 245, 246, 247. It's been a dog. I mean, it just has been a dog. This stock chart, I said when it was up here at 8, when it was up here at 20, people were like, well, it can't go below 20. I said it's a $2 stock. Absolutely, 100% you're going to $2. That's where I saw it going. It's there now. If you got in here at 3, I said, I wouldn't have taken that. I know some people took that trade, got all the way up to almost $4. So that's a great trade on this. Great trade. So not on the algorithm. Still doesn't have confirmation on the algorithm. On the 65-minute, let's see. I think it might on the 65-minute. If you're day trading Boyle, let's take a look. And yeah, Friday I'm going long. No, on the 65-minute, you're still not in. So interesting. But yeah, LNG. Lemonade, LMND. This one is a insurance company. They've got an agreement now with Chewy, I think it was, to offer pet insurance. That's not a big influencer, but 11.12. If you listen to the algorithm and got in at 11.12, holy crap, you're at 18.23. Kudos to you. It's got confirmation, secondary cross up. The RSI is at 63. Not sure I'm getting in, but expensive stock, not making money. AI on insurance. McDonald's, MCD. This one has a cross up. This one's boring. 287.79. You're looking at tops at about 300. So you're not looking at a huge. You could buy this and just kind of hold it. McDonald's. JP Morgan. Jamie Dimon knew about Epstein. I got issues with that. He's now in Taiwan after visiting China. JP Morgan, Royal Caribbean, RCL. Had a cross up. I think it's a secondary cross up. Yep. Secondary cross up. You're in on the algorithm at $65. You're trading at $85. Deere had a cross up. Jumia, JMIA, which is the Amazon of Africa. I don't think it's the Amazon of South Africa. I think it's all of Africa. $2.90. This is risky. Just understand that you're going into risk, but $2.90 is the buy-in on this one. Personally, I'm not going into that one. Cigna. If we are going into a recession and healthcare spending is continuing to go up, Cigna should be good. 253.20, and you're at 256. You're up 1.26% today. ARCG had a cross up. This is the ARC fund for genomics. I thought it was good at 99. I bought it 99. I think I made it to 120. I sold some at 120. I got back in at about 100. Sold out at about 50, I think. So this one has burned me in the past. It is super, super volatile. If we go and we look at the weekly on this, I'll show you a long-term chart on this one. It's just, it's back to where it was, pre-pandemic. So I don't think that's bad. I think Kathy Woods is a great trader. But SMMT is one that Sherry spends her lunch money on. We talked about this having one of the largest insider buys I've ever seen. Back here at 148, it's trading at 177. The buy-in is at 169. So if you want to get into that one, don't throw your money in. XLV, XLU, Honeywell, JD, T-Mobile. Let's look at this one. T-Mobile has a crazy TMUS is the symbol. They're down 10% today. And I don't know why. I was going to look this up to see why, to see if there's news on this one. This is a good stock. PE's a little bit expensive, but they have been growing their base. Nothing to report that. Oh, here you go. Amazon might offer mobile service. There you go. Amazon is in talks with Verizon and others for a low-cost mobile service. So maybe my Visible might be actually expensive at about $25 a month. But Amazon's in talk. That's why you're seeing T-Mobile down. My assumption is that Verizon might be down too. Let's see. Verizon is down. They're up 0.76. So maybe it's because they're in talks with them. Eli Lilly, Kraft Heinz, Lockheed Martin, Visa, Citibank, UNP, GE, and some Vanguards. I'm not going to go over those. I will put these in the newsletter. So if you're not subscribed to the newsletter, subscribe to the newsletter, and you'll get all the scans for today. There's a lot of them. My particular favorite, listen, Target is if you're looking for a long-term buy, I think Target is it. I think Nvidia is good. I think Microsoft is a great one. I think AVGO. I gave you some great stocks. Shopify, buy Shopify under 60. Yeah. So I gave you some great stocks. Have a great weekend. Remember, if you subscribe to the newsletter, once you get it, or even if you just want to post the link, it's Daily Stock Pick, no S, dailystockpick.substack.com. And you can basically subscribe to it, have your friends subscribe to it. It is free 100%. You'll just get it in your email box. Nice and boring. I'm going to make it nice. Try and, include some charts in it, but it's probably just going to be words. One of the things that I noticed in the newsletter is that in the actual email, you don't get these nice red and green. Like it's telling you Target's up 0.7, Macy's up 5.67. Macy's a great buy, I think. 5%. And you had 10% yesterday. So CrowdStrike is down 1.7, Chewy, and this is yesterday's newsletter. So you can see CSX up, NVIDIA down, Square is up, PayPal is up. I told you to get into those yesterday. They had a good day. TARK, UDOW, QQQ, DIA, ARCF, ARK. You can see Dexcom is down a little bit. WBD up 2%. But yeah, if you go to the actual Substack site, you can see the green and the red. I haven't figured out how to make that happen in the emails yet. So maybe it'll happen, maybe it won't, but go there and subscribe. So the sponsors. Let's talk sponsors. Visible, if you're paying more than $25 a month for your phone service, go to the link down below. You get $20 off. So, Brandon says he got red and green in the email. Maybe it's showing up now. But yeah, Visible, link down below. TrendSpider. If you want the charts, if you want access to my algorithm, TrendSpider, take emotions out of your trade. It's got the strategies. I mean, you don't even have to use my strategy. TrendSpider gives you strategies on their own. There's a ton of them in there. There's a Tesla 520 with 200-day by TrendSpider. It's an amazing, amazing strategy for Tesla by itself. So if you want to try it out, there's a free 7-day trial. The link down below saves you 25%. Remember, it's about $400 for the year. So you do have to have an appropriate size account. But if you have any questions, hit me up on the social. The link tree is down below. The link tree is also in the email. So hit me up. Okay. Talk to you guys later. Have a great weekend. Take care. Okay. Oh, boy, I just got an email that I should go to a hike. Export. Do I want to go for a hike? Let me see. Let's go to... Hold on one second. I gotta... Okay, I gotta move you over to Fidelity because I am going to upload this stuff. Upload video. Ooh, Ape loves Ape. I like that. Oh, Brandon, you screwed me up. Well, at least people know they can go to the site and see it. I didn't. The test email that I got, it wasn't there. So. Christian, I don't trust Jamie Dimon whatsoever. I think Jamie Dimon is slimy as fuck. I just don't. I don't like the guy. I don't think he's as good. Like Bill Ackman wants him to run for president. I responded to Bill Ackman, are you fucking kidding me? I don't trust that guy whatsoever. Nothing. Let's see. Podcast. 6.2 upload. We'll do a transition. Oh, it is. Yeah, don't hold it over the weekend. I'm telling you, 36 is a key level for TQQQ. I think anything at 36, I think you get out. Let's see. Copy. We're going to go down here. And let's go to Canva. Then I got to do the newsletter. I did a new graphic for the newsletter, by the way. Let's see. Move that down there. And AVGO. Okay, what else? Okay, we're going to share this. Download. Okay, close this. Create new. Upload failed? Oh. Okay. Where's that file? Hold on one second. I got a podcast. Nope. We're going to go. New episode. Okay, it probably wasn't done. So it's probably done now. Quick GarageBand. Save. We'll do a transition. P-coat. Oh, the fundamentals? I'll show you. Give me 2 seconds. I'll get back in there. It's in indicators. I think it's in indicators. I think. I could be wrong. But I think there's a way to add it. Okay, that's done. We're going to quit preview. We're going to title this that. Let's upload the thumbnail. Green Gaming. Upload. No, it's not made for kids. Next, next. Next. Publish. Close. Okay, save episode. Oh, come on. Nope. Okay. We've got to leave the page. Son of a bitch. Let's see, podcast 610. Let's go to P-coat. Insert ad. Let's see. Processing. Ugh, is it going to process and then have problems again? So, Christian, let me move you over. Let me show you. So here's what, it's in the indicator list. And then there's a earnings, dividends, splits. And I think it's in indicators up here on the left, on the top. You'll see indicators. Click on those three. And I think I've got it. No, that must not be it. Oh, here. That's not it. Go to other data. So up top, you'll see other data. And I've got analyst estimates. I don't show that, but I've got it listed there. You've got dark pool volume, fear and greed index, Federal Reserve economic data, market breadth, mentions on Wall Street bets, short volume, and splits. So it's in the other data. And you can do chart patterns. You can show heat maps, snippets. I don't even know what snippets are. Alerts and bots. You can create those. But that's how you show that fundamentals data. It's just earnings and stuff like that. Okay. Save episode. Please tell me you saved. Saving. Woohoo! Now I've got to go here. And I'm going to boom, 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 boom. Copy. I'm going to say and let me see. I'm gonna okay. And we're going to publish now. Okay. Oh. There we go. I don't need that. Okay. Now I got to do the writer dashboard. New post. Enter title. 6162. Oh, come on. Why is it doing that? Okay, and we're going to copy, and we're going to paste, and then 190 SPY, QQQ, AI, DPST, ABGO, Lulu, Cliff, Snow, Tesla, Baba. Wow, all the scans are showing positive so far. Except for Lemonade. Lemonade's the first one that's down. Everything else is doing well. ARCG. XLU. T-Mobile. Ironic T-Mobile went up so much, but God, imagine if Amazon launches a phone service for like $20 a month, you get unlimited. I told my buddy, here's what I told him, and it's simple and easy to remember. If you're in at under 7, I would say wait for 7 and get out. If you're in at 7, wait for 8 to get out. Email header and footer. Okay. Oh, and I've got to get, let me get this. And copy, Substack. Okay. We're going to put this down here. I can't. I'm on OBS. I think I see it on the thing, but are you smashing that heart button? Pod notes. Okay. And I got to run everyone. Publish without buttons. Okay. Boom. Your pod is in your mailbox. Okay. I am done. I will. If you guys need anything, hit me up in the socials. I gotta go walk the dogs. I will answer Robert's question. I'll answer Robert's question afterwards. Okay, 6-1 pod, 6-2 pod is done. I'm going to go look at, okay, channel content. So everything is uploaded. Okay, you guys, have a good day. I'm going hiking before, just so you know, I have a 2 p.m. meeting with lawyers on the Earthlink lawsuit. So it should be fun. Should be enjoyable. Okay. Have a great weekend, everybody. I hope we wind up green today. I hope we wind up green. I will